Hey everyone, how's it going? Welcome back to this week trade recap video. This week I closed on a bunch of trade, all in decent profit, and the biggest one right now is CAD Yen that I closed down for about 6.9% or so. Massive trade, and I also got in on Dow Jones and S&P 500 for a little bit of profit here on both particular trades. And then dollar yen, I also closed down for a pretty decent profit for about 3.5% or so. And then silver and euro dollar at the beginning of the week, one for break even and one for 0.5% profit. So let's take a look at all these trades from a price action point of view, like looking to my analysis, my entry, stop loss, take profit, and etc. So starting with CAD Yen here, if we look at the higher time frame, we can see that there is a double top that the price is forming, and I like how price initially pushed up to that double top and then failed to continue higher. Instead, we had a push down from the price and then start forming this continuation correction. So to me, this is a very clear head and shoulder pattern on the higher time frame, and together with that double top, so already adds confluence for a potential sell. And if we look at the lower time frame as we do multi-time frame analysis, when we see that right shoulder of that head and shoulder pattern forming, we see that this is an impulsive move. This is a continuation correction. So basically looking for the next move down from the price once the right shoulder completes. So we dig a little bit deeper into it, we did see that there is a impulse breaking out of that right shoulder, and then there is continuation correction here, and that's always how I'm looking for a kind of a continuation price action. Is looking for that lower time frame correction to possibly get in. So we look deeper into the price here. After the price has break out from that larger head and shoulder of the right shoulder, and we formed that continuation pattern, and I was basically looking to see whether or not we could get an entry here, and basically price push out from this continuation correction, and there's also a smaller correction that it formed. So I open with a correction after breakout, one of my entry I talk about in my videos, and basically set the stop loss below, set the entry below the correction and set the stop loss above the high of the correction. So 20 pip is the absolute minimum I would do in this kind of scenario, and price basically tag me in and then massively impulse to the downside and then form a little bit of correction here and then continue to push down. And at first, my initial target is basically this neckline here where the price basically formed this previous bottom where the price is going to continue upwards. So I was looking to see what the price will do at this bottom here. And we kind of just impulsively break below that. So I was happy to see how the price will go, continue pushing to the downside. And during this time is during about the London session where it's actually I'm sleeping because I'm from the West Coast. So when I woke up, price already kind of pushed up. So I knew that I didn't want to give back more profit, and I know this neckline here was where I'm going to take profit anyways. So I already moved down my stop loss to below the neckline here, and basically price on Friday morning kind of just pushed up and then pegged me out for a massive 6.9% or so. So very big trade. Very happy to be able to catch this one. Pretty big, massive trade. Usually I don't hit this big of a profit. Usually 1-to-1, 2-to-1, 3-to-1 is usually how I will be able to exit the trade. But in this case, price does push out impulsively, so I was able to capture this potential run. So that is the first one. CAD Yen running closed down for about 6.9% or so. Let's look at Dow Jones. So Dow Jones and S&P 500s were also trade I enter about midweek or so. Like the overall price action, if we look at the higher time frame first, right, higher time frame was forming this kind of ascending channel, just like how previous ascending channel was formed. So basically similar price action as we see now. And we look at the lower time frame here, we see the same ascending channel, and we see a lower time frame ascending channel as well. So patterns within pattern, structure within structure. As well, we have this kind of a double top in area where price initially pushed up and then reversal impulse down, and now it's basically looking for a continuation correction. And basically, price did form a continuation correction, kind of give me that entry here. So again, set the entry order below, set the stop loss above the high. Price pushed down initially quite impulsively, and then form a little bit of correction to push down lower. Um, one can argue that I could probably take profit here or so because price a few times trying to break down, but it just doesn't continue afterwards. But I was looking for more of a long-term approach on these indices if I was going to get a bigger market correction or a potential market crash, and I was kind of be more lenient on my stop loss. So I'll kind of just monitor the price to see what's going on here. Initially pushed down and had a reversal up, but I didn't exit the trade halfway here because when I want to exit these deep positions, usually I want to follow by some sort of bullish continuation correction, and that's usually going to be a sign for me to exit. While the price just kind of pushed up without a correction, so I'm happy to hold it at break even at first, and then start consolidating here a little bit, kind of moving in a sideways consolidation. It becomes looking more about the flag now. So on Friday, I basically moved down my stop loss to exactly 1-to-1 risk reward, just above this previous high area. And then on Friday New York session, it kind of just impulsed up and then basically hitting my stop loss out for a 1% profit. So that is the second trade. Dow Jones took out for a 1% profit. And let's look at the third trade, S&P 500. Very similar price action, very similar kind of outlook like the Dow Jones as well. So higher time frame, similar ascending channel we can see for the previous kind of price action. Going down to the lower time frame, so the ascending channel, there's a lot of these corrections in there, and smaller ascending channel pushing the price up. And again, similar price action, right? We have this kind of a push to the upside, reversal impulse down, breaking out of this ascending channel, and then lower time frame continuation. So again, set my entry order just below the correction and set the stop loss above the high. Price technique, just like Dow Jones, form a correction here, push down, and then just didn't continue lower. Again, my management at the time, my plan was to hold it for longer term because I want to see if this is going to be a bigger market correction and eventually push down lower. But in this case, it did not. It kind of had this bullish impulse to the upside, and already my stop loss is at break even, of course, once we passed 1-to-1 risk reward at previous low. But again, we pushed up the price, but there was not a bullish continuation. So my plan usually at this time is just kind of wait for the price what's going to do. Sometimes we'll have an impulse up and then just another reversal impulse down and then continue downwards. So it's kind of looking to see if the price is going to do that. Instead, it formed kind of the same kind of price action, a little bit of consolidation, just like Dow Jones. So it becomes an impulse up, followed by the continuation correction. So on Friday, when I saw this, I just moved down my stop loss to about 1-to-1 or so. And then price, same thing, basically impulse up, hitting my stop loss here for a 1-to-1 profit. Now, some people usually ask me, why don't you take profit here? Again, this is a video I'm going to make hopefully in the near future about moving down the stop loss and things like that. Understand that when you are in a position, you should have a plan on how you're going to manage it. And my plan for both Dow Jones and S&P was to hold it for longer term because I was expecting price to break out and then continue, basically push off this next bearish run. But in this case, it did not. So I still stick to my management. I didn't want to make emotional decision, and my management with these kind of scenario is I will only exit the position if I see some reversal kind of price action. If my original analysis was downside and then I see a bullish impulse followed by bullish continuation, and that's usually going to be a sign for me to exit the position and then just take whatever profit I can and move on. And in this case, S&P and Dow Jones just secure a little bit 1% profit, and I'm happy to do that because if I don't, you can see both of these trades end up heading up to break even anyways. So very happy that I was able to secure 1% profit. So let's move on to dollar yen. Dollar yen was a trade I actually opened from last week and then closed down this week. So dollar yen, we talk about the overall entry from last week as well. We like that double top. We like this expanding structure. The price basically had the initial push up to the upside and then kind of formed that double top, reversal impulse, continuation correction, and then that's how I'm able to take into this position, push down massively, and then how I got out of the trade because I was looking at this position pushing down and form another correction here, but it basically formed a bottom here, right? Reason double bottom, and then price is basically pushing up to the upside, and I managed this correctly because I knew that for the times that I did enter these sales from previous dollar yen positions, they all pretty much pull back here pretty sharp as well. And I didn't want to give back profit as much in this kind of scenario because we're still in this consolidation. So I basically, when I put an alert here, when I saw this double bottom, I put the alert here and I just move down the stop loss just above this high here, and then basically on New York session price just impulsively up, hitting my stop loss here and basically forming a continuation correction and then push up to the upside. So if I didn't exit this position for 3.5, I would end up with a break even once again. So it's very important to have a management plan, have an exit plan. It doesn't have to be the same with everyone else. It depends on yourself and your trading plan overall. For me, once I hit about 3% profit or so and I continue to push down, I'll definitely understand to move the stop loss down. I didn't want to give back more profit back to the market. As we can see in the past, a couple of these sell positions I personally got kind of all reversed back up. And I just didn't want to give back the profit back to the market as we're still in this larger consolidation, and certainly that we can continue to correct within before the potential downside. But I'm happy to secure profit here and basically move on to other opportunities. So that is dollar yen for out for about 3.5%. Silver was also a trade I entered last week and closed down this week as well. We talk about the entry, we talk about the management, and the exit plan here was when I see price push up and then push above this high here, so I already moved my stop loss to break even. However, after breaking above this high, we just didn't see any further continuation. Instead, it's a very sharp reversal. So I don't like how we just broke the recent top and then have a very sharp reversal. So again, after hitting about 1-to-1, usually I will move the stop loss to break even already. And in this case, because I see a very, very strong sharp move to the downside, I decided to move up my stop loss to about 0.5% profit or so. In this case, it tagged me out just to here, and then I kind of continue going up here, but forming a head and shoulder pattern, and then eventually drop down. So overall, I was happy to manage it accordingly. Happy to get a little bit of profit here, 0.5% or so, instead of taking a break even here as we see this top here, and price basically failed to continue higher after breaking this high. So that is the fifth trade that closed down, that was entered from last week. So silver to close down for about 0.5% profit or so. So last one I'll talk about is euro dollar, because euro dollar I actually got off for break even, and I saw many people who either look to enter here or enter here end up taking a loss or substantially more loss, and I want to explain this a little bit more. We talk about the entry here, we talk about the overall price at the time of the entry looking pretty clean with the descending structure. We have that double bottom, and then we have lower time frame kind of reversal. Everything was looking good. It did have the bullish push up, and that's how I got into position. But however, everyone was looking to scale in this position or enter this position, and basically all get tagged in here or tagged in here somewhere, and eventually prices fall down here pretty strong here during the close to the New York session or so. So to me, I was just sleeping at the time. When I woke up here, my stop loss was already at break even once this bullish push up on the price. So stop loss at break even, but when I woke up, this just massively pushed down and basically just tagged me off for break even. Now I probably could have secured a little bit more, maybe 0.5% or so, just like silver, but I was not at the charts. I was basically sleeping when when the London session going towards the New York session. I just couldn't catch this or wasn't on the chart to move it to 0.5 or so. And even if I could, I think this move was so sharp that I probably wouldn't be able to anyways. But looking back at this, I thought that the entry was fine. I saw this as a descending structure towards the double bottom and the higher time frame descending structure as well. So I thought my entry was good. Push to the upside was good, and just failed to see a entry for me personally. I would have probably set a scaling entry order or something like this, but price just never impulsively out and then continue higher. It just didn't give us that bullish push up opportunity and basically reversed down now, taking me out for a break even. And that is it for euro dollar. When after that happens, I was much more careful. I was much more kind of observing what the price would do in this area. I wasn't inclined to enter any more dollar position. I want to just kind of wait and see the development before I jump back to any of the dollar position. In fact, I'm very more neutral, kind of just observing to see how next week will go as the price kind of dollar getting a little bit strength here. So we'll see how this overall structure goes, if it's going to give us another potential reversal from the bottom, or we're going to continue drop to the downside. So to recap, there are three positions that were open for previous week that are closed down. Euro dollar is one that got off for a break even. Silver was a trade that closed down for about 0.5% profit. And dollar yen was the bigger one that we closed down for about 3.5% or so, with catching this potential bearish run, and then the reversal happened. And three trades I entered this week were S&P 500, got off for a 1% profit here. Dow Jones also got off for a 1% profit here. And CAD yen is the biggest one and the most profitable one so far. For a couple months, I haven't caught this kind of a big position. It's about 6.9% or so that closed down for a healthy profit. So any question, comment, feedback, welcome to let me know, guys, about these trade recap videos, and I shall chat with you guys all next time in my weekly trading market outlook. Thank you very much.